Hey, what's up, stock compounders? Brad here. So this is an interview with Mohnish Pabrai that happened, I think, mid-April. It was a couple weeks before the Berkshire Hathaway annual meeting for 2022. Now, I started watching this talk maybe a month ago. The audio quality isn't very good. It was kind of a strain to follow it. But just yesterday, I got poked by one of my friends on Twitter who said, hey, have you watched this? You should really check it out. Because Pabrai talks about some things in this video that I've never heard him talk about before. And of course, some of the things he has talked about before, but they're good to really drill in. So I'm going to share my highlights from this interview. I hope you enjoy it. I also made a Twitter thread. If you want to just really quickly go through, I will link to this in the description. It's like 10 tweets summarizing what I took away from this video. And then at the end, Pabrai references about 8 bets that he's made with Pabrai funds. 8 bets of consequence, right? Sizable bets. And I'm going to take my best guess as to what those bets are at the end. So stick around for that. I think it was in London Heathrow Airport. Pabrai was traveling. He just happened to pick up a book by Peter Lynch. He read both books by Peter Lynch, which led him to Warren Buffett. And now, what Pabrai realized fairly quickly is that Buffett had codified the laws of investing, right? The immutable laws of investing. These are like the laws of gravity. And what Pabrai noticed is that the mutual fund industry didn't really follow the laws. The laws that Buffett had figured out were so important for being a successful long-term investor. There aren't that many laws. A couple that Pabrai pointed out: make few bets. Okay, have a concentrated portfolio in your best ideas. And the second, hold these companies for multi-year periods, right? You're not buying a stock that moves around every day, right? You're buying a partial stake in a business. That's kind of an idea from Benjamin Graham. And in order to invest, you're owning a piece of a business. So you don't want to trade it frequently. You want to buy it and you want to own the business. That's the path to investment gains. So Pabrai thought to himself, if somebody just followed these laws of investing laid out by Warren Buffett, they'd probably be able to do better than a lot of the professionals that weren't following the laws. So Pabrai decided, well, I actually want to test that. It's a pretty theory. It sounds nice, but I want to put it to the test. So in 94, I think he had sold part of his business. He had $1 million that he didn't need, right? It was just sitting in his bank account. And so he did an experiment. He bought, I think, 12 or 13 stocks, mostly in the US, some in India. And over the next 5 to 6 years, he was able to turn $1 million into about 13 million. Okay, so the experiment worked phenomenally. He did have some tailwinds. There were a few kind of tech bets that he made, being that he was from that space. He had built his business in the IT services sector. And so he had a couple hundred baggers in the portfolio that he was able to get out at a very opportune time when the bubble, the dot-com bubble, was full on. But he tested that and it worked. Now, he talks a little bit about Charlie Munger in this interview. He says, I think Charlie is a very unusual human being. And Oxana was asking, why do you think Warren and Charlie kind of stuck to each other, right? Why did they remain with this incredible partnership over so many years? Charlie is a very unusual human being. In my opinion, he is much smarter than Warren. Now, I've never heard anyone say that anyone is much smarter than Warren Buffett. But Pabrai thinks Charlie Munger is much smarter than Warren Buffett. I would say there's a huge difference in the two of them, right? Huge difference in level of intelligence. So that, I've never heard anything like that before. I'm a bit surprised by that. But this next point maybe explains it a little bit better. So Warren is very narrowly focused on investing. So all of Warren's intelligence, he really channels into the pursuit of finding great investments. Charlie has broader interests, right? He's interested in investing. He's interested in architecture. He's interested in a lot of different things. He reads very widely. So, that could explain why maybe Warren has done a little bit better in the realm of investing, even though he doesn't quite have the intelligence that Charlie Munger does, just because he is so singularly focused on that pursuit. A couple nuggets about Warren and Charlie. For Warren, it's really important that the activities he focuses on are ones that he is good at. And Pabrai mentioned, as Warren has gotten older, his golf game has struggled. Okay, he's gotten worse as a golfer as he's gotten older. And it was pretty easy for Warren to just drop golf, right? As he became worse, he just stopped playing. And that kind of speaks to this. He really wants to do things that he's good at. Charlie enjoys bridge but has no desire to improve on it. I was surprised to hear that. He doesn't even want to learn basic conventions. So it sounds like for bridge, with Charlie, it's really just for the fun of it. He's not looking to be the best bridge player in the world. So you kind of get insights into what drives those two, what's at the core of their DNA. A little different. Warren wants to be the best. And it sounds like Charlie really just wants to, in the case of bridge, have fun. In many other pursuits, just continue learning. One of the mental models that has helped me the most in life is to be a cloner. Of course, we've heard Pabrai talk about this in other interviews as well. I've been cloning for more than 30 years, and I still haven't figured out the human aversion to cloning. Seems like he's got some handle on it, right? People don't want to be labeled as copycats, as unoriginal. Most humans look down on cloning. Only 1 to 2% of humans embrace cloning. Okay? A very small percentage of humans that are willing to go out and say, hey, that's a great idea. I'm going to adopt that idea and use it as well. Graham led us astray with selling at intrinsic value. Okay, so Graham's whole idea was to buy $1 for 50 cents, have the margin of safety, and then get rid of the asset when it appreciates to fair value. Pabrai thinks that that is not the optimal way to invest, to grow wealth over a long period of time. That's really something he learned from Nick Sleep, is to buy great companies. You want to get a good price for them. You don't want to overpay for those companies. But buy great companies and then go to sleep, right? Do nothing. Sit on your hands for many years, as long as the great company continues to be a great company. And this goes back to Munger not really knowing how to defend holding Costco at 40 plus price to earnings ratio. He would never pay that price to buy Costco, but he's also not willing to sell Costco at that price. So, it's just this idea of sticking with the winners. Let them compound your gains for you over many years. And of course, by not paying taxes, by not having that taxable event of a sale, it's much easier to keep that compound growth engine going. And of course, when you sell something that you know really well, you know it's a great business, and you're buying something new, you don't know it as well. Okay? So the more decisions you make, the more activity you have, the more likely you are to compound mistakes. So that, those are a few thoughts on that. He talks a little bit about Alibaba here. The Alibaba sale was driven by tax loss selling. Okay, so that was one piece. There were two pieces when Pabrai sold Alibaba, and he's talked about this before. He says, after I made the Alibaba investment, I got to know Tencent better, and I believe it's a superior business model and a superior company. So kill two birds with one stone. One, we captured the tax loss, okay, lowered our tax burden. Two, we ended up with a better business. And of course, Alibaba and Tencent were both falling. So you got the big loss on Alibaba, but you also have a very attractive price on Tencent, which helped. There are many businesses that Alibaba has that I do not like. I hate retail. They have retail businesses. Tencent, in their capital allocation, runs circles around Alibaba. And I think, Pabrai talked about Tencent as having these bazookas. One, they can reinvest into their own business, into their incredible software engineers, and generate like 65% internal returns on capital. And then when that runs out, which it runs out very quickly, because it's hard to hire a lot of new great engineers and keep them busy. So the other one is the digital Warren Buffetts, right? Having a portfolio of incredible businesses outside of Tencent to be able to invest in. And of course, they understand that space really well, right? Because they're building within it. So they can also identify peripheral businesses that they want to invest in. So Pabrai thinks that's just a much better business model than what Alibaba has with their quite large exposure to retail. The important thing to be a really good investor is being really good at watching paint dry. Okay, that's the key. You got to have patience. You can't have a need for all kinds of activity as an investor. Pabrai's mentioned before, you have to be a gentleman or gentlewoman of leisure. Reading. Pabrai spends the vast majority of his time as an investor just reading, right? He talks about Charlie Munger as being a conveyor belt, where Charlie's got his chair, he's got his high-powered lights behind him because he can't see very well. On one side, he's got this stack of books, and the books just go through him to the other table. It's this assembly line of information coming through. And Pabrai spends a lot of his time doing that as well. If you're a person who is happy watching paint dry, then this is a great business for you, right? Investing. If you are unhappy to sit in a room and do nothing, this is not a good business, okay? Because that hyperactivity is just going to destroy your investment results in large part. There's probably successful traders out there, but over the long run, the value investors tend to rise to the top. Clearly, there are many great businesses in the U.S., but they're not at bargain prices, at least the businesses that Pabrai can really wrap his head around. He's not finding compelling prices in the U.S. Here's the last part. We have 8 bets of consequence. Okay, I'm going to show you guys these on Ticker Terminal. If you guys don't have an account with Ticker Terminal, I'll leave a link in the description where you can find access to that. So eight big bets, basically. You can see here Most of these are not U.S. Micron is his largest holding. That is a U.S.-based company. But we've got Suntech and Edelweiss Financial. These are both Indian companies. Races, which Pabrai seems the most bullish on out of any of his companies. He thinks this might be the first 100 bagger in Pabrai funds. I mentioned those two 100 baggers. Those were pre-Pabrai funds in the late 90s. I think it was 2000 when Pabrai opened Pabrai funds. So Races, Turkish warehousing company. Nice Holdings. This is in South Korea. Now, these last three, Rain Industries, I mean, he's been selling a lot in 2022, right? A 78% drop. Looks like in the first quarter of 2022. So I'm not sure if this is one of the big bets he's talking about. Shinnikin and Seritage, I think he's probably fully exited by now. So these certainly aren't two of the ones he's talking about. So what is this? Maybe these six, at least these top five, Prosus, which is a way for Pabrai to access Tencent at a discount. Okay, that's why Pabrai owns Prosus. And then the other one, I think, is this Turkish company, Agisa Hayat. Okay, it is an insurance company, pension and life insurance business in Turkey. So I think it was earlier this year, maybe in March or April, Pabrai spent a few weeks in Istanbul kind of touring businesses in Turkey. He has some other investor connections there. I think Matt Peterson went to that as well. Pabrai's daughter tagged along as well, Monsoon Pabrai, who recently launched her own fund. And it sounds like this is one of the other Turkish compounders that Pabrai is excited about. So, if you include Rain Industries, that's 8. If you don't include Rain, there's one I'm missing. So he's not required to disclose all of his holdings. It really depends on which country he's investing in, what the rules are for that country in terms of what percentage ownership of the business you need to have in order to be required to disclose an ownership stake. Clearly, Pabrai is investing all around the world. So there may be one that I'm just not aware of. But that's my best guess at the 8 high conviction bets that Pabrai has. But back to the last point here in the interview. We have 8 bets of consequence. The top 3 are more than half of the portfolio. So you can see here, 44, 18, what is that, 62, and then another 15, 77%, these top 3. Of course, we're missing a couple in here, right? So that's going to skew the numbers a little bit. But the top 3 bets, Pabrai said, are more than half of Pabrai funds. Even if we are wrong on half of the 8 big bets, so let's say 4 of them are just totally wrong. Even if we're wrong on half, we will do very well. Okay? So it's really the nature of this business. Investing is a very forgiving business. And I like that he mentioned, if you're a brain surgeon, you can't be wrong on half, right? You can't make mistakes on 10%, right? Or probably even 5%. It's just the nature of investing where it's much more a probabilities-based game. And honestly, even if you know everything you can possibly know about a business, something can come out of left field and completely jeopardize the future of that business. So it's a game where there's no 100%, right? You cannot get 100% in this game. And I think, a lot of us, especially who rose the ranks of academia, we were trained not to make mistakes, okay? So, it's really important to realize if you're going to play this game of investing, mistakes are par for the course. And you have to construct your framework, construct your approach, knowing that, so you don't sabotage yourself or, fall into some emotional traps along the way. And I like this to leave here. Every time you make a mistake, you get a chance to learn and get better. Okay, so a mistake that maybe isn't even a mistake in the sense that it makes you a better investor. If you own that it was a mistake, if you can look at it clearly and identify what the mistake was, you can learn from it, right? You can add it to your investing checklist. Better yet, if you can learn from other people's mistakes. And that's, I think, when Pabrai's portfolio was down the most, back in 2008, 2009, he actually hired some interns. And he said, figure out, study these great investors and figure out which of their investments lost the most. And then out of those investments, could it have been seen at the beginning, red flags, right? Seeds of destruction in those investments from the beginning. And he identified a number of different, factors that lead to investments going wrong. One being, too much debt. And, he talks about this in different places, but that must have been such a return on his investment to do that study where you figure out, okay, where are these other people making mistakes? So that it doesn't cost me, it doesn't cost my bottom line going to zero on some investment, to really integrate these lessons. Of course, the lessons you learn in the School of Hard Knocks are probably going to sink in deeper, right? You're much less likely to make those same mistakes because they're painful. But that doesn't mean we need to get all of our lessons that way. Much easier if we can learn from others, learn from the mistakes of others. So that's all I got from this one, guys. It's just 38 minutes long. So take a look if you're really a diehard Mohnish fan. I appreciated this interview. It was more casual, and I found Pabrai quite candid in a lot of his responses. I think this is his home in Austin, his new home in Austin. And I'm not sure how he knows Oxana. She wrote a book, I believe, How to Be Rational. I think it was called something like that. And I think Charlie Munger was a big focus of that book. So maybe Charlie Munger is the link that connected these two here. But just wanted to share my highlights from yet another Mohnish Pabrai interview. All right, guys, that's it for today. See you in the next one. Take care.